everyone, welcome back to my channel. Today's topic is about do people really need insurance? So always insurance agent will tell you need to buy this, you need to buy that. But then here I'll analyze different demographic of people and whether these kind of people really need insurance, and then in what situations do they not need the insurance. Okay, so before I start the topic, we need to define what is insurance, right? Okay, so yeah. Okay, so the stupid wording is like, oh, okay, so now we can see the wording. So insurance is a contract that individual or entity pays an insurance company in exchange for financial protection. So the protection, right, is only financially. It's not like prevent you from getting illness or anything. It's just financially it protects you. Okay, so how does it protect you? Either through reimbursement of losses that you have incurred, or like those kind of benefit that they pay out if there is a covered event. Okay, so there are two types of insurance. One is reimbursement, one is a benefit payout. Okay, so if you don't know these basics of insurance, then it's very hard to understand the rest of the video. So you guys better find out what is reimbursement insurance and what is benefit payout insurance. Okay, so never mind, just for the sake of this video, I'll be explaining that as well. So reimbursement means like you must actually incur the loss first, so you need to pay for the actual loss. Then after that, you claim it from the insurance company. So technically, you cannot get back any more than what you have actually paid. So that's called reimbursement plans. Okay. So benefit plans is they don't care how much you spend. So like let's say you have cancer. Okay. So you have cancer. Maybe you spend 100k in your cancer fees. Okay. But this is not important to the insurer because the insurer only pays out upon diagnosis of cancer. So if you buy a 100k, maybe you buy a 200k cancer plan, the insurer doesn't care if you only spend 100k, they will still pay out this 200k. Okay, so there's only the whole world, right? There's only this kind of two different kind of insurance. One is reimbursement payout, one is benefit payout. So like the different terms like life, all this thing, right, is all later than say, because this one is called product types. So but insurance types is only these two. Okay, insurance types is two, product types there are many types, but actually, they are not very complicated, but it doesn't matter. It's not the purpose of this video. Okay, so let's go and examine whether people really need insurance. Okay, so now we are at the slide. Do people really need insurance? Let's find out. Okay, so demographic of people I'll analyze, and why is it split like this? Okay, so these are the demographics that will be examined. Whether the person have more passive income than expenses, whether passive income is less than expenses, and whether they only have active income or if they have no income. Okay, so what's the definition of passive income? It means that if you're dead, disabled, or ill, the income can still continue to flow in. So these are some of the examples of passive income. Like a lot of people talk about passive income as like, I don't know, but most people have like a warped view of what is passive income. Okay, so these are some examples of passive income. Like really, you die already, right? It will still continue to generate income. Okay, yeah, but this is passive income is usually only for the rich lah. Yeah, so normally poor people like us don't really have any passive income. So yeah. Okay, so some examples of passive income is rental lah. Okay, so if you look at the recent yields for rental, it's about this is gross yield lah. So it's before like deducting expenses and everything. So don't forget there are still expenses like taxes, renovation, agency fees, all these things. Okay, so to be honest, I'm not really a fan of rental income as a source of passive income, because technically there are also days where you cannot find tenants, all this thing, and then also to buy a property is a super big ticket item. Whereas if you do like stock market investment, or you do like those kind of what's called ETF investment, all these things, right, is you need less capital lah, and also the risk is lesser because it's more liquid. Like you don't need to, a big ticket item definitely you take a long time to sell your house or whatever. So regardless, you can also make capital gains on your house or whatever, right? But it takes a long time to sell. So let's say you do money right now, can you sell it? It's not going to be sold immediately. It's going to be sold at a huge loss if you want to sell it immediately, right? Yeah, so in distress, right, properties are not good assets. But then if you intend to hold it over a long time and just totally generate rental income, and then it's a freehold, then definitely it's worthwhile investment lah. But like most people in Singapore don't really have properties as investment because it's really such a big ticket item lah. Yeah. And also with the increasing interest rate, all these things, it will affect your yields as well. Okay, so to be honest, I really prefer like ETF investment lah. So SPY, if you calculate right, technically if you invest into SPY the past 30 years, you have been getting 7.7% return. So this is the starting and this is the ending, right? So just plug into the calculator, financial calculator, is 7.7% per annum. Okay, and then property, like I mentioned, this is before, so it's gross, so probably net is maybe 2%. I mean, if you want to count capital gains, you need to count capital gains annualized, right? So it's going to be around the same or maybe a bit more, but then you hold much more risk with properties lah. Okay, so it's up to you if you prefer properties as your passive income. Okay, so why did I split the demographic like this, right? Like why is it like passive income, active income? Okay, because basically this covers everyone in the world lah. So the factors which determine whether you need insurance are all these factors, because these are the like trigger factors that trigger the payout. So whether death will happen, whether disability will happen, whether illness will happen, accident injury will happen, and whether you will retire. Okay, so if you intend to work forever, then technically there's no retirement. Okay, then death, quite unlikely that everyone lives forever, right? So most likely you still need some death insurance, but also depends on whether you have any dependents and whether you have passive or active income lah. Okay, so I'll be discussing that later. So disability, so death will only affect no more active income for the household lah. So if you don't have any household, you are just alone, so death insurance you don't need. Okay, disability, so disability will affect those with you will have no more active income like if you are disabled, because technically your employer won't want to hire you anymore, right? Quite rare that employers that wants to hire you, so depends on your job scope lah. Okay, so disability, probably no more active income, and then you still need a caregiver. Imagine you're disabled means you can't do your activities of daily living, so probably you need a caregiver also. So additional expenses plus active income is gone. Okay, so illnesses, also possible loss of active income, and probably need a caregiver lah. So depends. Okay, accident injury, so could be temporary loss of active income. So usually accident injury shouldn't be so serious unless it's disabled lah. So depend on the severity whether you need a caregiver or not. Okay, so retirement is just basically you stop your active income, so you only rely on your passive income and your savings for your life lah. Okay, so yeah, so I split like this. Okay, so we analyze the first demographic. So those people who are rich, they have, asset rich, they generate passive income every month, and then this passive income is enough to cover their expenses. Okay, so for this kind of people, right, they don't need their day job. Okay, so they don't need their day job, so they don't need income in place, replacement insurance since their passive income is enough to cover their expenses. Okay, so however, when expenses increase due to death, disability, illness, or inflation, right, the passive income might not be sufficient to cover the expenses anymore. Okay, because the expenses rise, then passive income stay the same, right? Unless you're saying your passive income grows at such a fast rate that it can cover the rising expenses, it's going to be hard if you don't buy any of these insurance plans. So these insurance plans are recommended, especially if you're trying to achieve 5 years, which is financial independence, retire early. So if you want to retire early, right, means you are relying wholly on passive income, right? So if you are wholly relying on passive income, then definitely you need to limit your expenses. But if your expenses keep increasing, right, then it will be unsustainable to achieve this 5 year. Okay, so like I mentioned, reimbursement plans needed for large expenses, especially so accident and hospitalization. So whether for yourself or your loved ones, I don't care you got family or not, just make sure you have reimbursement plans. This is very, very, very important. The rest are more optional if you don't think you will get so serious until you need a caregiver lah. But to each its own lah. Yeah. Okay, so disability income, critical illness plans might be needed because your expenses will increase if a caregiver has to be hired. So if you didn't know the recent hospital plan changes, right, if you get cancer, not all expenses will be covered by your integrated shield plans anymore. So definitely some critical illness or cancer plans is good for you lah. Yeah, but if you still think it's not required and your passive income is enough, then go ahead. Okay, so death plans helps to cope with any, let's say you're a very, very, very rich person lah. Okay, then you have a lot of assets, you got your own business, all these things. So all these death plans, right, that you buy for your family, if you don't have a family, then it's not very useful. So death plans to help cope with rising business expenses. So when you pass on, right, imagine you're a CEO of a company, nobody's running a company, definitely there will be rising expenses, all these things, right? Like people want to leave cause, hey, why CEO sign gone, what's the new direction of the company, all these things. Okay, so all these expenses will rise, and then probably your profits will drop temporarily. So these death plans can help to cope with all these rising business expenses, help you to preserve your assets. So let's say you buy a mortgage insurance, then your house is totally, now your family can just take the whole house without ever repaying the loan because it's already covered by your death plans. Okay, then next, I mean, if you still if you have passive income covering your expenses, then next time you have a child, then probably your passive income might not be able to cover your expenses anymore. Okay, so then probably you need to think about having maternity or child plans to help cope with the rising expenses or having a child with special needs lah. So in case the child got problem, okay, let's say you plan super well, like for kids to have a normal life, right? But what happens if your kids come up with special needs? How are you going to cope with that? Then because imagine you just have passive income lah, then how are you going to cope with that? I mean, even if you have active income, it will still be impacted because you need to take time off to go and take care of the child lah, all these things. Okay, so optional also things like retirement plans. Yeah, so I know a lot of people are like super against ILPs, but ILPs do have some amount of positivity. So like imagine if you invest through an ILP, right? Like let's say I invested 2 years ago lah. Okay, 2 years ago it was the bull market, right? Then after it went to the bear market, right? Okay, so imagine I invest the ILP 2 years ago, and then I suddenly die this year. So I die this year, most of the ILPs will actually pay out at least the premium paid. If not, my family will be getting the cui returns, which is due to the bear market lah. Yeah, so usually most of these ILPs actually can ensure that your investment value is at least the amount of premiums paid lah. Okay, so this is the only good thing about ILPs. Okay, so some ILPs maybe have other good things. Not very sure. Okay, because I don't analyze the whole market of ILPs, but some ILPs do pay out like bonuses every single year if you continue to stay invested lah. Okay, so if you want, you just invest yourself because technically, if you have the enough knowledge, you can totally invest yourself. Okay. Then another option one is like legacy plans. So like I mentioned, death plans will help cope with all this. So it's a important way to help you retain assets and grow wealth for your family, not for yourself. Okay. So rich people actually do know the importance of insurance, and they always use it to grow wealth for their future generations. So if you don't do it well, your future generations cannot enjoy wealth lah. So like I think I see one quote before, it's like all it takes is one person in a generation to achieve wealth lah for the future generations. Okay, yeah, so this usually people who fall into this demographic are rich people with a lot of assets like I mentioned. Okay, so it's quite rare to see people like average people with a lot of assets that generate passive income. That's why most of them are like workers who earn an active income lah. Okay, so like how life insurance can protect business owners, it can build wealth, it's also a asset. Okay, yeah. Okay, so just showing some examples of people who probably have passive income that is more than expenses, but still why insurance can still be important to them. So this guy Samuel, he has blood cancer, possibly dying. So if he's possibly dying, he probably can benefit from a critical illness insurance and also a death insurance, and also like hospital insurance. So all these things are actually very important even if you're rich. So I mean, if you're rich, right, like imagine you want to get the best cancer treatment ever, right? So the best cancer treatment ever, you don't think it's going to be super expensive, man? It's going to be super expensive. It's going to take an impact on your wealth. Okay, so no matter like how rich you are, right, it's going to impact your wealth. Okay, so why not like maybe take about 10% of your income or whatever to ensure that 100% of your income is protected. So this is the mindset of insurance lah. So for now you are left with 90% of your income, but then if in the event of like anything happen, you still have 100% of your income after that. So if nothing happen, you get 90%, fine. Okay, I live a slightly below average life, 90%. Then if something happens, boom, I'm back at 100%. And also maybe if you minus the standard of living or from getting illnesses, all these things, maybe I'm back at 90%. So it's like around the same. But then imagine you don't buy the insurance, you get 100% of your income currently. Boom, something happens, you get 0% of your income. So that's the risk you're willing to take lah if you're not buying any insurance. Okay, so next, this example about Mark Lee, his daughter diagnosed with kidney disease very young. Yeah, it's just a rare kidney disease, like young people, all these things. Okay, so child illness will definitely affect you if you have just relying on passive income lah, huh? Okay, so another one, accidental death. Okay, so all these things will affect everyone lah. Okay, so all these are just news articles I just take from the Straits Times. Okay, so even like kids, child accidental injury, 2 years ago taken to hospital. Yeah, so all these things can happen, don't care how old you are. Okay, then kid, say like less than 1 year old, death in the nanny's home. Do the parents actually need the money from the kid's death? Not really lah, but probably you need a bit for the funeral. Okay, and also I guess like regardless, the parents will be very sad that the kid died, right? But there's like some kind of like consolation from the death plan if the kid passed on lah. So this is the consolation that the parents can get if the parents had actually bought insurance for the kid. Okay, and then next, I mean, like, let's say they want to sue the person, right? You need money, right? You need money to sue the person, right? So where are you going to get money to sue the person? So you can sue the person. You take the life money, go and sue the person. You want to get revenge on the person, sue the person. Okay. Then next, accidental injury. So a lot of this kind of car accidents is very common lah, because no matter how safe you are, right, someone can be unsafe and then render you unsafe as well. Okay. Yeah. Next, accidental illness. So dengue outbreaks are accidental illness lah. Okay, so even if you super like spray a lot of mosquito repellent or whatever, the mosquito can still come and bite you. Okay, so don't care one. They don't care you how old or whatever. Dengue can still happen to you. Okay, so another one is like kids lah, going to school. You think like nothing can happen to them. See, the kid, right, also can play pranks on each other and make them disabled. Can you see like how sad that is? I mean, there are risks all around the world. So if you are willing to take all these risks, right, and really just want to live at 100% all the time, but when it happens, you live at 0% and go ahead lah. Yeah. Okay, so even like father can accidentally run over their own kid, because sometimes it's just like lack of focus, sway, like you can't be helped one lah. Yeah. And we move on to the second demographic of people which they have passive income but it's not enough to cover the expenses. So this means that they have an active income as well as passive income to try and cover the expenses. So when I'm talking about expenses, or when I'm talking about monthly expenses lah, okay? So since active income is needed to cover expenses, right, then definitely you need some form of income replacement insurance, okay, which is required on top of just now what I talked about, the people in that have income, passive income more than expenses one just now, huh? Okay, so this one you just insure death and disability at least 10 times of annual active income. So your passive income probably you don't need to insure for it if you think it's sufficient. Then for illnesses, definitely at least 5 okay, to me, right, I think 3 times is not enough. 3 to 5 times is the recommended amount for critical illness, but to me, right, it's not enough because of the recent changes in the integrated shield plan. So to me, at least 5 times of your annual active income should be covered for critical illness. Okay, so the reason why we use income instead of expenses to measure, right, is because you want to maintain the similar standard of living as before you got your illness. So you look at income instead of looking at expenses. So like whatever savings you have gotten through your active income, so we remain you at the same thing, same level. Okay, so we use income instead of expenses to measure how much insurance you need. Okay, then move on to the third demographic, which is active income only. So you totally don't have any passive income. This is most people in Singapore, they do not have any passive income. Okay, so since no passive income, right, then all these income replacement plans are more important than ever lah. So like I mentioned, death, disability, at least 10 times of the annual income means for the for the active one. So this one you only have active lah, so you go and calculate how much you need lor. Okay, so some examples of people with active income only with no passive, and then they have like child illnesses. So what, chemotherapy, fail to work, then obviously you need to take time off to go for all this thing, take care of your child, right? You need a caregiver for your child. yeah, so all these things take money, you think drop from the sky, huh? Okay, so can be something simple as like you go for holiday and then your bungee cord just snap mid-air, all these things, accidental injury, income loss, and even possibly death. All this will affect you. Okay, then blind man causing a road accident, accidental death. Okay, so the whole family will be affected lah. Yeah. Okay, so lastly you also have like cancer, critical illness. So very young, like fit or whatever, all these people still can get cancer. Okay, nobody cares how old you are, nobody cares how fit you are, you can get cancer. Okay, and it's just a heng shui thing. Okay, cancer is just cells science start dividing weirdly and then inside you have a lump, the cancer. Okay, yeah. Okay, so lastly we have the fourth category, which is no income, whether passive or active. Okay, usually is people in retirement, they don't really invest in anything, then they have no passive and no active. Okay, yeah, so they just have assets and they just deplete their assets slowly lah. I mean, most people don't really plan for their retirement, that's what happened to them, right? Okay, so if you have some assets currently, you can think about building a passive income stream. This is a good thing to do. Okay, build a passive income stream. This is not nothing related to insurance, just your financial planning. Okay, then basic accidental and hospitalization plan. Because you are in retirement, you have no income at all, you need to make sure you can preserve your assets for the longest time possible until your death lah, huh? So all this help to plan for this huge expenses that don't deplete your assets too fast. Okay, so you can deplete slowly a bit, but right, in one shot, boom, everything gone, right? Okay, so depends on your risk appetite. Okay, yeah, so disability income plans is very important for people with no income, because you are so old already, then high chance of being disabled lah. Okay, then legacy planning lah. I mean, you know you are going to pass on already, you are already in your retirement, and then it's good to plan for your loved ones so they can get more money, they can live a comfortable life after you are gone. Okay, so make your death worthwhile lah. Yeah. Okay, so imagine you are in retirement, you already hire a maid, then the maid come and then need to go ICU, 3 to 4k, then employer faces 165k medical bill. So imagine you never buy insurance for your maid. How? You want to deplete your assets by 3 to 4k a day? How long can your assets withstand this? Even if like 1 year you add up to 1 million in like extra expenses, like, huh? You got 1M to spend on your maid? Don't have, right? Okay, so next, no income. Yeah, so more and more people in retirement are going back to work because helps pay for rising living expenses, as you know, inflation very high, and healthcare. So if healthcare expenses keep rising, then you need the insurance for it. How to, like, let's say you budget 10k for your health stuff lah, then suddenly the health stuff like increase by I don't know, double or something. How are you going to pay for it? You can't, right? Can't pay for it, so you need to actually let the insurance pay for it lah. Yeah. Okay, so no income. Yeah, even like people with no income, like 7-year-old boy, all this thing, right, also can have multiple injuries, all these things, like for example fracture, maybe cannot walk anymore, all these things, you know. Yeah, so basically we come back to the question, doesn't that just mean that everyone needs insurance? Okay, to me personally, I think everyone needs insurance, but it's really, if you look at like an objective view, it's a yes and no question. So it all boils down to how much downside risk a person is willing to take. If you're willing to take downside risk all the way to zero, then don't buy any insurance. Okay, if you're willing to take downside risk maybe like 50%, maybe you can buy just the reimbursement insurance. Okay, you're not willing to take any form of downside risk except for the premiums, then you have to buy all the adequate insurance lah. Okay, so not willing to take any downside risk, how much are you able to afford to pay for the coverage of this downside risk? Okay, to me, insurance is really just more important than ever lah. So who is, like, I mean, I believe most people get COVID before already, right? Yeah, so all this will make you more likely to have a CI in future. So being female or being older than 40, yeah, so sad being female. Okay, being obese, being a smoker, or having previous medical conditions. And probably if you have previous medical conditions, you can't really buy the full coverage lah. But I mean, half the coverage is better than zero, right? Okay, so that's the end. So if you guys got any questions, feel free to reach out to me on all these channels. Okay, yeah, so that's all for today, and then if this video has helped to change your view regarding insurance, and then I hope you guys can share this video with your loved ones and then help to change their view as well. Okay, so if you guys need any insurance, feel free to reach out to me also. Okay, so I will try my best to advise you to what suits you best lah. Okay, so this is as I mentioned, this is not a financial advice or anything. This is just like purely objectively analyzing what ways that people need insurance and what ways people don't need insurance. Okay, yeah. Okay, so that's the end of today's video. Please help to like and subscribe. Okay, till next time. Bye bye.